Hi guys, I welcome you in this wonderful video. So when it comes to entering your trades, now we know that the most important part of it is confirmation, making sure that you confirm before you press that buy button or before you press that sell button. And we know that confirmation can come in different methods depending on the strategy that you are using. Some they confirm using oscillator, some they confirm using some price action patterns. But we all know that confirming that indeed the price is going to go in that direction that you anticipate is very, very important in your decision making as a trader, more especially as a price action trader. So, the mistake that we usually do as traders when we analyze, we tend to prolong this process of confirmation in such a way that we end up entering very, very late. I'm going to get into the chart, don't worry. So we tend to wait for a lot of different confirmation. Let's say a trader maybe is waiting for some moving average to cross. Let me just change the color. He's waiting maybe one for some moving averages to cross, and then the other confirmation is waiting for some kind of RSI maybe, and then maybe a third confirmation he's waiting for some kind of a pattern break on the lower time frame, and maybe a fourth confirmation he will be looking for a reversal candlestick pattern. So you see that it's multiple confirmations for an individual entry. I don't say it is bad, it is very, very good. You should make sure that whatever decision you make, you confirm that trade. But there are some cases where you really need to keep this process very, very simple. You really need to keep this process very, very simple. Why? Because in price action, the only thing that you do as a trader, you identify the flow of the price, which is going to tell you the strength. So the main thing in price action trading, it is the strength. So you analyze the flow of the price, you identify the strength, and then simply when the strength is now opposed, you know that it is time for you to go on the opposite direction, or to go or on that direction that you are planning. So I will now make an illustration with this chart right here. So let's say you are looking forward to go short, you want to sell this, and then as you analyze, let me just get into details. As you analyze, you observe that okay, the price is flowing upwards in some kind of a pattern, and let's say you firstly draw your trend line all the way down here. That's your initial flow, and then as you observe the price going up, you begin to see a change in the flow of the price. So you begin to see a shift, meaning now the price was getting a little bit stronger or a little bit aggressive. And as you see this flow, you can see even this kind of a flow, it is made up of highs and lows. You can see we have highs, we have lows, we have highs, we have lows, we have highs, and we have lows. As you observe these highs and lows, what you need to keep in mind as a trader is that how you look at the highs and the lows, it is what's gonna guarantee your entry or what's gonna guarantee your decision making. But if you are gonna ignore these highs and lows, let's say you just don't care about them and so on, your main analysis or your main focus, it is just this main supporting trend line here, you're gonna miss a lot. What's very, very important, it is to make sure that you focus as well into these details. Let me just put them back again, I can bring them back. So what matters, it is that you focus and you pay attention into all these minor details, because they are gonna give you the good entry that you are looking for. Remember what I said earlier is that you should make sure that you avoid over confirming your trade so that you don't enter late. So one can say, by doing what you're doing now, you are over confirming your trades. No, I haven't came into confirmations yet. What I'm doing right now, it is analyzing the market. It is analyzing the behavior of price. The reason it is called price action, it is because every decision you make it based on what the price have been, what is the price have been doing. So you observe these highs and lows, and then there is this interesting point. If I can highlight, there is this interesting area. If you can see in this area, you can see a high which is now no longer higher than the previous one, and you can see this low which is lower than that previous one. So you can see that in this area there are already signs that okay, now it seems like the buyers, they are getting weaker from what they've promised us through this move. And then apart from that, let's say you just analyze even in details and you observe that okay, the price is currently on a very important level. You highlight it like this. Let me point it out like so and make it more visible. So you observe that, okay, the price is in a cool level, the support level, which is likely to act as a resistance here. So you want to make your decision based on that level. For you to make the right entry, let me erase everything and put back my support there. So for you to make a good entry, because you have this level, which is a support, and it is turning into resistance, because you have these key levels, there isn't any need for you to wait for more further confirmation, to wait for indicators to cross, to wait for further patterns to be broken, for the fact that you have observed that here, closer to that area, and put it back closer to that area, there is a pattern that is already broken. I'm gonna put the two of them here. So as you can see that closer to that area, there is already a pattern broken, and there are signs that now the price is going down. There isn't anything wrong about you entering here as a sell, but other traders will wait for this main supporting trend line to be broken and then wait for another retest to come, and this retest may appear very late, and this kind of confirmation, those are the confirmation that make traders to enter very late, and you'll find traders entering and only to find out that they are entering and now the market is going to go against them. Why? It is because they don't even trust their main initial analysis. For an example, if you spot a support level and you indicate that this is the main or this is the key level, it means that you think that price is going to bounce from that level. And when you see price bouncing from that level, why then do you prolong the entry process to wait for further details to be displayed on the screen, which will lead to you entering very late? I hope this is making sense. For an example, I'll make an illustration. Let's say another trader again, or the same trader, if I may say. Let's say observe that resistance. I'm not going to go back there, but let's say identify this as a key resistance. A very wise trader will begin to execute his trade when price is on this level, because he believes that indeed price is going to bounce here. He's going to execute his trade when price bounce in this level. But another trader will wait for even more confirmations, he will wait maybe to see clear patterns of lower lows, which will happen maybe somewhere around here. So the next trader will enter somewhere around here, and when he enters here, he will also be facing some kind of panic because he's entering close to a support level. So these are challenges that we face as traders, but the main reason is that we focus into detailed confirmations. We wait for patterns that will not appear anytime soon. So make sure that once you identify a very important level or a very important structure, be bold enough to make that decision. And then the question will arise that, okay, what if it doesn't work? If it doesn't work, it is cool. You will be able to reanalyze your trade and make sure that you wait for another opportunity to enter again. And the advantage is, let me just point out the advantage here. The advantage is if you enter here, if you enter all the way there, up there, you are in a very good level to put your stop loss. Let me just put this on here. Let's say to like that. You are in a good position to put your stop loss all the way there, and it is very close to your entry level. But if you enter all the way down here, you see that the right area to position your stop loss is very far to your entry point. You will find yourself sacrificing to put your stop loss all the way here, which is something good, but it might happen that you might miss some opportunity. For an example, let's say you enter here and then price just goes slightly above, and then it gets resisted by that level there, and it goes down. You will miss this because you'll be already out of the trade because of your stop loss, which was closer. So boldness will always put you ahead, guys. So once you identify something, be bold enough to make an entry decision, and I believe it's gonna help you a lot. So I appreciate you watching this video. So thank you. Just keep on watching, and we'll meet in the next video.